A very good afternoon to you, great Govs. My name is Mr. Simbi, and this lesson is brought to you by the Gauteng Department of Education in collaboration with Sabono Discovery Center. It is a lovely day that I get to meet you on this Monday afternoon. What a year it has been. Right from the beginning, from January, we began these lessons, and here we are today on the 3rd of November. We are about to write our final paper, which is tomorrow. And I want to believe that you guys have done so well in your paper one that you wrote in the previous week. And I believe that you're going to do well tomorrow. There's a worksheet that has already been sent to you. Talk to your teachers. They must be having this particular worksheet that is going to assist us as we do in today's lesson. I'm happy to have you in my class. And my apologies to keep you waiting. But as they say, good things deserve you to wait. Okay, so let's go. So here are my objectives in today's lesson. I'm going to begin with the structure of paper 2. I'm going to speak to the structure of paper 2. What do we expect to come in paper 2? And then I'm going to also look into inventory valuation. I'm going to come into inventory valuation. I'm going to look into the bank reconciliation, the creditors reconciliation. We're going to do cost accounting as well as budgeting. So these are aspects that I hope to cover with you today as we prepare for tomorrow's paper. Let's get busy. To begin with, as we speak about the structure, you have to know that there are topics that are quite vast that can be tested in paper 2. For example, your cost accounting can be tested in paper 2, and we are going to prepare on it today. And I want to believe that you've been preparing on cost accounting in preparation for tomorrow's paper. Inventory valuation is also very key that you also prepare on inventory valuation. You should also prepare on your budgets. Reconciliations, you will see in today's lesson, I have a couple of reconciliations that I'm going to go through together with you. Value-added tax is also tested in paper 2, but in today's lesson, I will not be touching value-added tax due to time, and I will also encourage you to go through your tangible assets, especially your problem-solving questions. But in today's lesson, I will not be doing calculations due to time, but you can do that in your own space. Okay. So when we come to our reconciliations, there are different reconciliations that you have to prepare. You have what is known as the bank reconciliation. Most of you know it as the BRS. And it is very key that you know this bank reconciliation. And in today's lesson, we are going to do the bank reconciliation. And there is also what we call the creditors reconciliation. And on the creditors reconciliation, there are two different types of reconciliations. There's the one with the control, and there's the one with the ledger or the statement. And in today's lesson, I'm going to do both, where you have the control and the list, and where you have the ledger and the statement, so that I can just remind you of these different types of reconciliations. I am going to do both of them together with you. Debtors reconciliation, very key that you go through these ones. But today, due to time, I'm not going to cover your debtors reconciliation. Okay. So here is more additional information that you need to know about your paper 2. All right. But as I've said, because I started a bit late, so I'm not going to read this information. It is very key that you go into your SIP material and you look from session 9 to 20 and session 21 to 32. You'll find all this information, and there are worked examples that can assist you in doing your calculations. All right, so let's get going. I hope that you guys have a calculators. I hope that you guys have somewhere to write. The worksheet has been given, so we are going to begin with inventory valuation. We're going to begin with inventory valuation. Let's get going. All right. So we know that when we wrote paper one, the weighted average was tested in paper one. But in this lesson, we're going to be looking at our first in, first out. So the question reads, Helen Woods owns an electronic shop that sells a variety of electronic products. The financial year ended on 28 February 2025. Records of headphones, television sets, vacuum cleaners, and pressure cleaners are provided. And then 3.1, calculate the value of the closing stock using the FIFO method. And then 3.2, Helen decided to change the supplier. So we're going to answer these ones. What I want to encourage you is, when you're writing tomorrow's paper, it is very important that you start with the questions that you understand. Start with the topics that you understand. That will help you to boost your confidence. That will help you to enhance your understanding even of other topics that will come. And inventory valuation is one of those topics that may be affordable in many exam papers. So let's begin and see more information that was provided. Here is information that has to do with our inventory. And here is more information as well. So we're going to begin now with 3.1. And 3.1 says calculate the value of closing stock on 28 February using the FIFO method. Calculate the value of closing stock using the FIFO method. Okay, so using the FIFO method, remember with the FIFO method, we look at the most recent purchases. And the most recent purchases are your 350 units. So you're looking at your 350 units here. So you come here, you're starting from the bottom, then you come in, you say 350 units here, and then you draw a line over there. And then you now say, look at information C, information D, and E. Very key. We are told, headphones are delivered to the store by Jeffy Transport at a non-refundable rate of 20 Rand per unit. So once I hear this, I quickly come and I say, my unit price is going to change therefore. It is no longer going to be 140. It will be 140 plus 20. Here I'm going to come, then I say plus 20. I come here, I say plus 20. I come here, I say plus 20. All right, so I've added. That helps me when I'm calculating. I have already added my carriage to the unit price over here. So I look again at information D, and information D says 80 headphones that were purchased in December were returned. So the keyword here is December. So you come and you look for December. Where do you find December? Here at the bottom. Then you come and you say, in December, you no longer have 320 because 80 were returned from there. So it will be 320 minus 80. All right, so I want you to see on a calculator how much you're going to remain with. You're going to remain with 240. That is what remains in December. So you're going to come now and you begin your calculations because you look at the most recent, which is December. So you're going to come here and you're going to say 240 over there. Then you say 240, you multiply that 240. And you say 240 multiply by what? It's 140 plus 20, that is 160. So you come here, multiply that by 160. Let's see if I can get my adding machine. There you are. So we'll say 240, and then we're going to multiply by 160 like that. And that is going to give you 38,400. So I come here, then I get my 38,400 like that. And then I now go up. So after December, I come to the month of September. In the month of September, I'm now saying I have 350 and so far I only have 240. So I'm going to come in, I'm going to say on my calculator, 350 minus 240. And you see that you need 110. So the 110, I'm going to get it in the month of September. I look at the month above December now. So I go to September. That's why I'm going to get my 110. So I come here, I say 110 here. And it's going to be 110 multiplied by 155. and I'm going to punch that in the calculator. So it's 110 multiplied by 155. And then I'll say 110, multiply that by 155. And that is going to give me 17,050. So I come here, I get my 17,050. And then when I add these two amounts, let's see how much we're going to get. All right, so I'm going to come and we're now going to say 17,050 plus 38,400, like that. And then when we add them, we end up with 55,450. 55,450. That becomes the value of your closing stock using your FIFO. 55,450. Very key that you already adjust for your carriage, and whenever units are returned, go and subtract them already, so that when you do your calculations, you already know you need 350. In December, you can't get 350, and you can't get 320 either. You can only get 240. Then you say 350 minus 240, that gives you the 110, and then your calculation is finished in that case. Let us quickly move on to the next one, and the next one is 3.2. The next one is 3.2. Let's look 3.2. It says on 3.2, Helen decided to change suppliers in September 2024 after receiving advice from her sister, the store manager. So, and then the first question then says, provide 2 points that show customers are unhappy with the quality of headphones purchased from the new suppliers. Okay, so this is a very common question that you find in many exam papers that is to do with inventory valuation. And whenever we are asked whether customers are satisfied or unsatisfied, we have to look at a number of things, and we're going to do that together in this question. All right, so one of the first things that tells us about customers' satisfaction or dissatisfaction is the number of units that would have been returned. As you can see here, we have 80 units returned. Okay, so we'll come here, then we say 80 units were returned. So 80 units were returned. All right, and if you want to know what percentage is this 80 units, you simply say it is your 80 over, and then you divide that by your, because this were from what? From December, divide that by 320. All right, and then you multiply by 100 over 1. Just multiply that by 100 over 1 before you close it, just so we know the percentage already. And then you multiply that by 100 over 1. All right, so we are now going to say it is our 80 of the 320 units. 80 of the 320 units were returned, and that's going to give us 25%. That gives you 25% here. So 25% of the units were returned. That is a cause for concern. A quarter of our December purchases have been returned. So that tells us that we have a problem. So 1 point that shows that customers are unhappy, it is because 80 units from December we returned, and that shows us that it is 25% of that. Let's go again and look at another point. If you see, in the previous year, we had stock of 170 at the end of the previous year. At the end of the previous year, you can say this date is the same as the 28th of February 2024. We had 170 units. But in this year, we have 350 units. So you can see that the closing stock, you can come then you say the closing stock is high. This closing stock is high, all right, because we have 350 units over the total purchases, which is 1,250. You multiply that by 100 over 1. We want to know what percentage is our closing stock of the total purchases. So we come in, then we say 350, and then we divide that by 1,250, and then you multiply that by 100 as well, and you get 28%. So you realize that 28% of our purchases was closing stock. So we did not sell 28% of our stock that shows that customers are unhappy with our headphones. So you have 2 points over here. So these are questions that examiners normally ask, and you must be able to analyze your information and look into it and see what indicators do I see that tells me that customers are unhappy or customers are happy. So it can either be unhappy or happy. If your customers are happy, what does that mean? It simply means your stock is moving very much faster, or your closing stock at the end of the year is also less, and the number of returns are very low. That shows that customers are satisfied with the kind of product that we are giving them. Let's go on to the next one. The next question then says, what advice would you give to Helen about changing the supplier in the future? 1 point. Okay, so if you are to advise Helen on changing the supplier in the future, what advice would you give Ellen? And they say provide 1 point. Okay, so let's go. 1 point. Point number 1. We need to ensure that quality is good. We need to ensure that the quality is good. We need to ensure that the quality is good. All right, so we need to ensure that the quality is good. So remember, we want to have a good customer reputation. We want our customers to keep on buying from us. So if we're to change the supplier, we must ensure that the supplier that we're moving to has a better quality product that enables us to sell more. Okay, and the other thing is, before you engage a new supplier, also do background check. So here's my next point here. Do background check. You can do background check. So here we say do background check on the new suppliers. Do background check on the new suppliers. So then you can be sure that they have the ability to provide good quality and maintain providing the number that you also need. Okay, so what we're going to do, we're going to move on to the next inventory valuation question. And in the next one, I want to bring in different financial indicators that can be tested. Very key that you also expose yourself to financial indicators that can be tested in paper 2. I know you know that financial indicators can be tested in paper 1, mostly in question 2. But in paper 2, financial indicators can be tested as well, especially when we come to your inventory valuation. Let's look at it now. All right, and here it goes. It says, Safer Traders. Safer Traders is owned by CLO. The business sells bicycles, and the financial year ended on 29 February 2024. They use the first in, first out method and the periodic stock system to value their stock. They buy all the stock from the same supplier, and good internal controls ensured that there were no stock shortages. Okay, so it is very key, dear learners, that as you are in the exam and you are reading through your paper, you need to read everything. Remember, you read the question paper in conjunction with the answer book. You read the two at the same time. Question paper is here, answer book is here, and you read the two at the same time. Make sure you do that tomorrow. Question paper and answer book is here, and you read these two all at the same time. And 3.1.1 then says, calculate the value of closing stock according to the FIFO method. That is the first question, and you stand to win 5 marks here. The next question then says, calculate the following for the year ended: cost of sales, gross profit, and the rate of stock turnover. Okay, let's see if we can be able to do these ones. Here's our information, and let's begin with question 3.1.1. Let's go. It says, calculate the value of closing stock according to the FIFO method on 29 February. So this is something that we have already done, so I'm going to be quick about it. Where do we start? You look, number 1, for returns. These are returns from August. So we come to the month of August, and then number of units, we return how many? 50. That means here we now have how many? 850. Are we still okay? Beautiful. And then the next thing that we come and we look. How many units do we need at the end? We need 440. So I come here, I say 440 over there, then I draw my line. Then I go and I look at my most recent purchases. I look at my most recent purchases, and my most recent purchases is 300 over there. Then I say 300, I multiply that by 4,000. That is the unit cost. So I come here, then I say multiply by 4,000, and that will give me 1.2 million over there like that. 1.2 million. So remember here, I need to get 440, but at the moment I only have 300. So I look up again, bottom up. I look up and I see 500 there. How many do I need? 140. Can I get 140 out of 500? Yes. So I come here, then I say 140 over there. 140 multiplied by what? 140 multiplied by 3,500. So I come here, I multiply that by 3,500. And then how much is that going to give me? That is going to give me 490,000. And then when I add this two, that's going to give me 1,690,000. Can you hear me? Okay, beautiful. Okay, so are we good here? Yes. So this is very simple. With your first in, first out, start from the bottom, going all the way up. And then after you have got your figures now, what else can you calculate? The question then comes and says, calculate the cost of sales. So in order for it to make sense, I'm going to do something that you did in grade 11. In grade 11, you did the periodic inventory system where you were calculating stock using the periodic inventory system. Okay, now I'm going to do that. So if I come here, what am I going to say? I'm going to start with opening stock. I'm going to say opening stock here, and my opening stock is 1,890,000. So here it's 1,890,000 like that. Then I come and say plus purchases, and I come here, how much is my purchases? That's 8,405,000 plus, so I'm going to come here and say plus 8,405,000 like that. 8,405,000. Then I know that I must always subtract my returns. So I come in and say minus returns. So that means they must be in bracket. They have to be in bracket. And how much do I get? It will be my 50 bicycles, and these are returns from August. So I come and say in August, how much is the unit cost in August? 3,800. So it's going to be 50 times 3,800. We're still together? So if I come here, I take my calculator, it's going to be 50 times 3,800. And that is going to give me 190,000. It gives me 190,000 here. So I come here, my returns are 190,000 like that. So I'm now going to say opening stock plus purchases minus closing stock. That give me, then I say minus closing stock. Closing stock, remember, we've already calculated it. We've already calculated closing stock. How much was our closing stock? 1,690,000. Remember, we got that one earlier on. So I'm going to come here and I say minus 1,690,000. You see that? So even if you write it as a sentence, it is the signs that are very key. So you are saying your 1,890,000 plus your 8,405,000 minus 190 minus 1,690,000. Okay, let's see how much that would give us. Let's have our calculator and we see how much you're going to get. So I'm going to say 1,890,000 like that. 1,890,000 plus 8,405,000. 8,405,000. Then I'm going to say minus 190,000. Minus 190,000. Minus 1,690,000. Minus 1,690,000. And that will give me 8,415,000. So I come here, that's 8,415,000 like that. 8,415,000. That becomes my cost of sales. That becomes my cost of sales. So once I have my cost of sales, I can then get my gross profit. Once I have my cost of sales, I can get my gross profit. Because to get gross profit, I know it is sales minus cost of sales gives me gross profit. And my total sales is 13.8 million. So my sales is 13.8 million here. 13.8 million. And then I come in and subtract my 8,415,000, 8,415,000, like that. And that's going to give me my gross profit. So I'm coming here to say it is my 13,800,000, 13.8 million, 13.8 million minus my 8,415,000, like that. And that will give me 5,385,000. That will give me 5,385,000. That is my gross profit. When I'm still here, if I am an examiner, I can test you on the markup and say, what markup did the business achieve? I can test you on that. All right. If you are to calculate markup, how do you get markup? Markup is your gross profit, which is your 5,385,000. That's markup. Gross profit over cost of sales, which is your 8,415,000 here, like that. Then you multiply by 100 over 1. Then you get your markup percentage. I can test you on a markup percentage when you are at this point. Are we still together? So you need to know your markup percentage. But the financial indicator that was tested here was the rate of stock turnover. All right. So this one, you need to punch it in your calculators on your own. And okay, let's do it together. Okay, so you can say it is your 5 million. Then you divide it by your 8,415,000. All right. And then you can get a markup percentage of 64%. Then you can get a markup percentage of 64%. This was not part of the question, but I am saying an examiner can test that. It's very possible. And then the next one that we're going to do now is this one here, the rate of stock turnover. So the rate of stock turnover simply means how many times do you buy stock, sell it, and then got finished, then going to buy again. Rate of stock turnover. And when you're doing the rate of stock turnover, I want to encourage you. It is very easy to do your rate of stock turnover using units. I know most of you have been using rands, but can I show you another faster, simpler, and easier way to calculate your rate of stock turnover? Okay, so if I'm an examiner, I can test the first one. I can test you on the stock holding period. All right, so you can be tested on the stock holding period. Stock holding period simply means how many days have we been holding on to stock? How many days have we been holding on to stock? So to give you a simple analogy, it means this is my stock. So when we're talking about stock holding period, it means we are holding, here's my hand, and we are holding the stock. So that means the stock has to be on top. The stock has to be on top. So that means here would come and then we'll say your average stock. To get average stock, so once it's the stock holding period, your average stock has to be on top. So to get average stock, it has to be your opening stock, which is your 540, then plus. And then you take your closing stock, which is your 440. Remember, you're getting the average. That means you multiply by half. And then you divide this by your cost of sales. Cost of sales simply means the units sold. Then you divide that by 2,300. That's the units sold. So you divide that by 2,300. That's the units sold. And then remember to multiply by 365 days. That gives you your stock holding period. That gives you your stock holding period. Let's see if we can do this together. So if you come here, you're now going to say it is your 540 plus 440. And then equals, then you divide by 2. And that gives you 490. Then you say the 490 divided by 2,300. And then you multiply by 365. And that will give you 77.8 days. So here to give you stock holding period, 77.8 days. That is if the stock holding period is what the examiner wants. But in this case, we're not asked the stock holding period. Remember, stock holding period, the stock is on the top. We are holding the stock, so stock has to be on top. So the next one is the stock turnover. So you simply turn it over now. You simply turn it over. In other words, stock holding, the stock is being held at the top. You hold stock at the top. And then stock turn over, you simply turn it over. That means cost of sales is now on top, stock is now at the bottom. So we're calculating stock turnover. So that means you're going to come here and you're going to say it's 2,300 like that over your average stock. Your average stock is your 540 plus 440. Remember, you are getting average over here, and your answer must be in times. Your answer must be in times. So you get 4.7 times. That becomes the answer. All right. Are we good? Okay, good. So that is another question that an examiner can test in this particular question. If again another question can be tested, it can be somewhere along the same lines. All right, somewhere along the same lines, where the examiner can come and say, calculate how long in days it can take to sell the closing stock. Okay, calculate how long in days it can take to sell the closing stock. I'm going to repeat again the question. Calculate how long in days it can take to sell the closing stock. So you simply come and you say, your closing stock is what you want to sell. So you take your 440. You say your 440 is your closing stock. And how many units have you sold this year? You have sold 2,300 over 2,300. Over how many days? Over 365 days. You want to see how long in days it can take to sell the closing stock. So you come here and you take your calculator. You now say 440, you divide that by 2,300. And then you multiply that by 365 days. And that will give you your 69.8 days. It will give you 69.8 days. Remember, this is a different question. This one is saying, how long in days will it take to sell the closing stock? That very same question, an examiner can change it again and say, calculate the stock holding period in days using the closing stock. Did you get me now? Okay, so I created a different question here, which is not here. The question that I've tested you on says, calculate how long it would take to sell the closing stock. We want to know, if we're to sell the 440 units, how many days is it going to take us? And we realize it's going to take us 69.8 days. Now, that very same question can be turned around, and an examiner can now come and say, calculate the stock holding period in days, but using the closing stock. All right, so here we use the average stock here. That's why we're at opening plus closing. But you can also be asked to calculate the stock holding period, but only using the closing stock, which is the 440. So you don't have the opening anymore. You just have the closing, which is your 440 over your cost of sales, which is 2,300 times 365. And it gives you that number of days over there. Okay, let's quickly go on now to the next question. Okay. 4.2. 4.2 then comes and says, calculate Clearview Electronics buys and sells. And then here on 4.2, we said 4.2.1. So here on Clearview, they buy and sell two models of printers, Howie and Yama. The Howie and the Yama, and this company uses the specific identification method. Okay, and then 4.2.1, we're told calculate the value of closing stock. All right, use the specific identification method. Okay, let's do that. Let's do that. Okay, here's the information, and let's start with the first calculation. To do that, so remember you are calculating for the Howie, and then here is your Yama. Let's go with the Howie. So with the Howie, you have to know how many units you had at the beginning. Here is your Howie. So with your Howie, you had 90 units at the beginning. So you come and say 90 at the beginning. Did you go buy more units? Yes, you bought how many? 340 plus 340. Did you return any of the Howie? Yes, we returned how many? 5. Then you come and say minus 5 here. All right, and then We now say, did you sell any units of the Howie? Yes, we sold how many? 300 minus 300 over there. How many units do you now have on hand at the end of the year? You're going to say 90 plus 340 minus 5 minus 300. And that's going to give you 128. Let's do it together. Let's do it together. So you're going to say your 90 here, and then you're going to say plus 340. Plus 340, then you're going to subtract 5, and you're going to subtract 300. And you're going to remain with 125. 125, not 128, 125. And then you now say you have 125 units. What is the cost price of our Howie? The cost price of the Howie is 3,800. You multiply by 3.8. How much do we then get? 125 multiplied by 3.8. And then you end up with 475,000. So you come here and you end up with 475,000 there, like that. That is for the Howie. Let's come to the Yama. With the Yama, we'll now say, with the Yama, did we have opening stock? No. We began here with 495. So I come then I say 495 here. And then, did we have any returns? No. Did we have any sales? Yes, 430. So 495 minus 430. That's going to give us how much? 65. Then what is the cost price per unit of the Yama? It's 5,410. 5,410. That's the cost price of the Yama. So we come here and then we now say your 65 units, multiply them by 5,410, and that will give us 351,650. So we come here and we end up with 351,650, and then we add that and we add that to give us the total. So I'm going to come here and I'm now going to say 351,650 plus 475,000 plus 475,000. That's going to give us 826,650. So I come here, that's 826,650, like that. Okay, beautiful. Let's go on to the next one. Let's see what next question we can be tested on. The next question says, calculate how long in days it will take to sell the closing stock of the Howie printers. Does this ring a bell now? Okay, so it does ring a bell. What it simply means is we want to know in this year, how many units were we given? This is where you need to be very, very careful. You need to know for how long you have been selling that particular product. Don't always assume that it was 365 days. You need to read the entire paragraph to see, did we have the product halfway through the year, or the product was there the entire time, so that you don't use 365. At times you're supposed to use 90 days. At times the product was there only for 2 months, that is 60 days. So you need to know how long the product has been in the shop. So here it says calculate how long it will take to sell the closing stock of the Howie. So we come in the closing stock of the Howie. The closing stock of the Howie is how many units? So remember, we have already calculated the closing stock of the Howie. It is 125 over here. So we're coming here, we're going to say to answer 4.2.2, we take the closing stock of the Howie, which is 125 units. We want to sell the 125 units. Then we now say, how many units have we sold this year? We have sold 300 this year. In how many days? We sold those 300 in 365 days. So that would mean how many days are we going to take to sell this one? So let's put it on the calculator. We're going to come and we're now going to say it is your 125, and we divide it over 300, and we multiply that by 365 days, and that is going to give me 152 days. So I come here, that's my 152 days over there. Okay, and then let's go on to the next question. Explain whether SIPO should be concerned about the stock holding period of the Howie and the Yama printers. Remember, these are printers. That is very key. You need to know your products. Are your products fashion products? Is it clothes? Is it t-shirts? Is it shoes? Is it belts? Are they perishables? Is it yogurts? Is it tomatoes? Is it ice cream? Are your products seasonal? that will help you to comment on these kind of questions. So you just don't comment haphazardly. You have to know what type of product you have. Is it a seasonal product? Can it be obsolete? Can it fall in terms of demand due to changes in weather? Maybe it's jackets. As we enter into summer, then they may not be selling. Is it umbrellas? So you need to know what kind of a product you are given. So here it's printers, and we're asked, should SIPO be concerned about the stock holding period? But generally, if we're to look here, the stock holding period of the Howie is 152 days here, 152 days, and of, I think it was 152.1, and of the Yama it was 55.2 days. So should he be concerned? Okay, give possible reasons for the difference in the stock holding period for the two models. Okay, let's answer the first part of the question. Should he be concerned? Let's go. So you will see that the Yama has a stock holding period of 55.2 days, because remember, we're commenting on both of them, the Howie and the Yama. So if we begin with the Yama, we're saying the Yama has a stock holding period of 55.2 days. And you can see that 55.2 days, that's about 1 month and some days. This is less than 2 months. This is less than 2 months. But if you come now to the Howie, your Howie has a stock holding period of how many days was that? 152 days. Of 152 days. So the 152 days, we're looking at the difference between, so 152 days, if you're looking at it in months, we're looking at around, divide that by 3, we're looking at around 5 to 6 months. All right, so this is more than 5 months. This is more than 5 months. Okay, this is more than 5 months. Again, if you check the difference between the stock holding period of the Howie and the Yama, you can see that if you say your 152 minus your 55 days, you see that the difference here is going to be, let's put in the calculator. If you say 152 minus the 55, you end up with 97. All right, so you see that the Howie, which is the Howie, are taking 97 days more. The Howie are taking 97 days. They're taking 97 days more to sell than the Yama. The Howie are taking 97 days more to sell than the Yama. In other words, you could have put it in a different way, and you could have said the Yama are 97 days faster. The Yama are 97 days faster than the Howie. Okay, that is another way that you could have spoken about that one there as well. All right, and then give possible reasons for the difference in the stock holding period. What could be the reasons for the difference in the stock holding period? You can see that here you did not have opening stock of the Yama. So that could mean that it's a new product maybe that has recently been introduced. So that would mean that it would be a new model. This can be a new model because we did not have opening stock of it. It means it is likely to have been introduced recently. So that is a new model. And once it's a new model, remember, you're talking about printers, it will possibly have the latest technology. It will possibly have the latest technology because it is a new model. And the next thing that you can also look at is the Yama, that is the new one. The Yama may likely to be of better quality. it is of better quality, hence it is selling that faster. It is of better quality. Okay, so that is, and the reason why maybe the Howie is not selling that much faster, it could be because it is now outdated. It is outdated. They normally use the word obsolescence, that it is outdated. That could be the reason why it is not selling that much faster. Okay, I'm going to do one more question before I move on to another aspect over here. Let's quickly do that. So this one is talking about television sets, and here is the information. Due to time, I'm going to quickly jump on to my calculations. So here it says calculate the closing stock of the television sets. Let's quickly go. So you can see here we're not calculating of the quantum, but we're calculating of the crystal TV. So to begin with, we're going to say of the crystal TV, how many did we have of the crystal at the beginning? So we had 72. You remember what we did earlier on. So it's going to be my 72. Then I'm going to add my 186. Do it again together with me. Plus my 186. And then I'm going to subtract the one sold minus the 225 that have been sold. All right. That means I'm going to remain with how many now? So let's see if we can do that together. So it's going to be your 72 plus the 186 minus the 225. And that's going to give me 33. That means we have 33 units at the end. And what is the cost price of the crystal? It is 6.5. You multiply by 6.5, and let's see how much that is going to give you. Multiply by 6.5, and that will give you 214,500. 214,500. Let's go to the limpid. So with the limpid, you can see it was recently introduced. So we don't have it as opening stock, but we have our purchases, which is 115 here. So we come here, it's 115. Do we have any sales? Yes, 94 minus 94. So it's going to be 115 minus 94. And that's going to give us 21. So we come here, that's 21. Then we say, what is the cost price of our limpid? It's 7,200. So you come here, you multiply that by 7,200. So it's going to be 21 times 7.2, like that. And that's going to give me 151,200. 151,200. And then we add these two amounts, and let's see how much we're going to have. 151.2 plus 214,500 plus 214,500, and that's going to leave us with 365,700. 365,700 over there. Let's quickly move on to the next aspect. Then we're told to calculate cost of sales of the limpid TV and how long in days it will take to sell the closing stock. So because of time, I'm just going to do the cost of sales only. This one you can do on your own because I've already showed you. Then I'm going to go on to my next question. Okay, so I'm going to come here and I'm going to say on my limpid TV, we want to calculate the cost of sales. We want to calculate our cost of sales. We're going to say how much were the purchases. It was 828,000. So I have my 828,000 there. Minus my closing stock. Remember, I have my closing stock, which is 151.2. So I simply come and say minus 151.2 here. So it is my purchases minus my closing stock. And it will give me my cost of sales. All right. And then how much is that going to give me? If you put that in the calculator, that's going to be 828,000. And then you subtract 151,200. And that's going to give me 676,800. 676,800. That is what I end up with. And then the next one, the other option that you could have used to calculate your cost of sales is to simply say now, how many units were sold? We sold 94 units. 94. What was the cost price of each limpid brand? of each limpid TV. So you simply say whatever you have sold multiplied by the cost. That will give you cost of sales. Multiply by 7.2. Okay, so I'm coming here to say my 94 times 7.2, and that will give me 676,800. So it will give you again 676,800 here, which is exactly the same as that one there. Okay, so how long in days it will take? We've already done this one, so you must be covered here. And I will not comment on other calculations that pertain to our inventory here. I'm going to continue on, and I'm going to start on something a bit different. And this is problem solving. This is problem solving, and I want to encourage you, due to time, I'm not going to touch problem solving. I'm going to quickly jump now, and I'm going to start my reconciliations, and I'm going to start with bank reconciliation. So we're going to take a 5-minute break, and when we come back, I'm going to be starting with bank reconciliation. I am not going to look at my problem solving, but please do take time to look at this problem solving question. Very key and very important that you look at your problem solving questions. But because of time, I'm not going to look at it. I'm going to start off with my bank reconciliation, which we're going to start after this break. Welcome back, dear learners. Before the ad break, we did inventory valuation, we did our FIFO, we did our specific identification, and we did the calculations that pertain to inventory valuation. Now we're going to go on to our reconciliations, and we're going to begin with bank reconciliation. So here's the question that we have. We're going to do only one bank reconciliation, then we go on to creditors reconciliation. So we are told, use the table provided in the answer book to calculate the final totals of the CRJ. So we're going to do totals of the CRJ, and then we're going to calculate the bank account as well. And then we're going to prepare the bank reconciliation statement. So we intend to get this 13 and these 6 marks all at the same time. And again, because of time, I'll not be able to go through the internal controls that pertain to cash. I would encourage you that after this lesson, please go through and check your internal controls. All right. So as we begin our bank reconciliation, it is very key and very important that you remember your keys. If you've been following these lessons from January, we have keys to the BRS, keys to the BRS. And these keys to the BRS are as follows. Here are the keys to the BRS. Key number 1. If an item is recorded in the journals I'm talking about the CRJ and the CPJ. If an item is recorded in these journals, but that item is not on the bank statement, such an item, you bring it into the BRS. You get the first key? Okay. If it's in the journals, remember the journals are done by us. So we have recorded in our journals, but it has not yet appeared on the bank statement. So you put it in the BRS. That's key number 1. Key number 2 is if an item is not in the journals, that is by us, but it is now on the bank statement. That means you update your journals, you put it in your journals in that case. The third key is if an item is in the BRS. Remember now why it is in the BRS. It is in the BRS because it was in the journals but never on the bank statement. Hence we put it on the BRS because we were hoping for it to appear on the bank statement. So the moment an item is on the BRS and then we're told it now appears on the bank statement. And in most cases, the examiner may try to trick you and say it is not in the current month's journals. With such an item, you do nothing because we're looking for it to find it on the bank statement. The fact that now it appears, so you do nothing. Okay, let's go and see here. So here we're given the previous month's BRS, which is for the month of July. And then we're given an outstanding deposit, outstanding EFTs, and then we're told, note, EFT 1243, which is this one, 1243, in favor of a creditor. So we're paying a creditor with this EFT, dated on the 30th of July 2023, appeared on the August bank statement. So remember why it was in the BRS. It was in the BRS because we had recorded it in the CPJ. And now we are told that it has appeared on the bank statement, but the amount on the CPJ would be this one, the 2840. So in the CPJ we recorded 2840, but now we are told that that amount now appears on the bank statement, and we're told it appears on the bank statement with the correct amount of 2480. That is the correct amount. Now unfortunately I don't have my calculator anymore, so you're now going to say 2840 minus 2480, and the difference is going to give you 360. So it means you recorded, or we recorded, more in our CPJ. You can see here our CPJ has more. So how do you correct? If your CPJ has more, you bring it onto the CRJ. So you come here and then you say 360 in the CRJ. So if your CPJ is overstated, you correct an overstatement in your CPJ by recording it in the CRJ. Once an amount is overstated, you put it in the opposite journal. That's what we have just done here. And then, so that means I have dealt with this transaction and I put a tick on it. And then the next one, I have my totals. All right, I have my total CRJ, and you'd find it over here. I have my total of the CPJ, which you'll find over there. So I have dealt with my information A and B, and I still have not touched certain aspects here. But let's go and we hear what they will say. Let's go and hear. So we go on to the next one. It says, items included on the August bank statement, but not in the August cash channels. And the first item is an outstanding deposit of 13.7. An outstanding deposit of 13.7. So what they're telling you here is where it gets very, very tricky if you're not very careful. So here you are thinking, Mr. Simbi gave me 3 keys. All right, let's see if we can go back to where we were. All right, here is the 3 keys. If an item is not in the journals, but on the bank statement, you put on the journals. And if you come here, then they say, these are items that are included on the bank statement, but not in the cash channels. So you will think it is key number 2. But you have to be very careful and think of key number 3 that says, before you consider recording it in our journals, was it ever recorded in the BRS? So you will see that this 13.7 here was in the previous month's BRS here, 13.7. Why was it in the BRS? It was in the BRS, this 13.7 was in the BRS because it was in the journals for July. It was in the journals for July, but it was not on the bank statement for July. Hence, we put it in the BRS for July. Now, we are told now that in the month of August, it has now appeared on the bank statement. What do? It means we are coming back to key number 3. When item that was on the BRS is now on the bank statement, but not in the journals, you do nothing. You simply come, you tick it off, and then you go, and then you say, I am done with you. The biggest mistake you can make is to record it again in the journals. And the examiner puts it in such a way that you might be misled to record it in the journals. The next one is EFT 1244444895. Let's see if we have that again. Here is that EFT 1244444895. So that EFT was in the previous BRS. So now we're told it has appeared on the bank statement. We simply tick it and say we have found it. So the next aspect that I have to consider now is this bullet here now, which says here, direct deposit of 5780 by a debtor in settlement of an account of 6,000. So the direct deposit is 5780. That's the amount of money that we've received. And that money is on the bank statement. Hence, you hear it's a direct deposit. It's on the bank statement. We must record it in our journals. Do we record the 6,000 or the 5780? We record what we have received. We record what we have received. And what we have received is 5780. That is what we record. Let's go on to the next one. The next one then says, interest on overdraft. If it is interest on overdraft, this you would call interest expense. So it goes to the CPJ. So you come here, it's going to be 636 because it is interest on overdraft. So I bring it over here. The next one is service fees. So I know these are my bank charges. All right. And then I have credit card levies. So these two here, this one and that one, these are my bank charges here. So I know bank charges go to the CPJ. So I can come here and say here 367, and I can add the other one, which is plus 1438 over there. All right. Or I can put a full amount that would tell the examiner that I've already added them. But I would prefer if you can show them like that so that we know what you have done. And then the next one is credit card sales. And the credit card sales are 7,230. So this is our receipts. So it comes onto our receipts, and I'm coming here and it's going to be 7230. It's 7230 over there. It comes to your CRJ. Okay, so let's go on. So at this point, you can see I've not yet entered anything on my PRS. Let's go on to the next one. Then we're told items that only appeared in the journals. So these are items that appear in the journals. Journals are prepared by us. So we have recorded certain amounts in our journals, all right, and that appear only in our journals. That means these items must be recorded now in the PRS according to key number one. Okay, so format is of great importance. You need to know your format. So as I come here, I'm going to come and I'll start with my balance. All right, so my format is going to say balance as per bank statement, and it's going to end with balance as per bank account. And then I have a deposit of 17.9, and that is an outstanding deposit, and I credit my outstanding deposits. Credit outstanding deposits, and my outstanding deposit is 17,900. I credit it. And the next one is EFT for 1150. So I come here, and what do? I debit outstanding EFTs. Debit outstanding EFTs, that is for 11,540. And then the next one is saying get the balance of the bank statement. Let's see more information as we go. And then it then says debit order for insurance. So we have a debit order for insurance, which is 5909. That tells me already that goes to the CPJ. So I'm coming here, that's 5909. That's a debit order for insurance. And I have cash withdrawal using the debit card of the business, 3150. So if I have done a withdrawal, that's a payment, that's 3150. And then let's hear this paragraph here. It reads, a transfer from pet stores of 4.5 appeared on the bank statement. So there's a transfer from pet stores of 4,500, which appeared on the bank statement. But the bank informed CR stores that this is an error. So there is an amount on our bank statement of 4.5, and it's a transfer from pet stores. That simply means they credited us. All right. So that simply means they credited us on the bank statement with 4,500. But we have been told that this is an error, and this amount was incorrectly transferred to CR stores, and the bank will reverse this on the 1st of September. So we need to come now. Once we see there's an error, we come to our BRS and we correct the error. So I'm coming here and I'm going to say correction of error here. Correction of error. So what error had happened? They have made a transfer from pet stores, which is not us. So if it's a transfer from another particular company, they are giving us that money. So once we receive money on the bank statement, it will be credited. So there's an incorrect amount that has been credited on the bank statement. So to correct that, you're going to come and debit, and you're going to debit the 4.5 over there like that. And I think we've recorded all the transactions. It is very key, dear learners, that you do this correction of errors where there can be amounts that are debited. I've seen one whereby the bank has duplicated bank charges. So that means there's an error on the bank statement because bank charges appear twice. And you have to know which side are your bank charges. They will be on which side of the bank statement. They will be on the debit side. So you correct it by putting it on the credit side. Or it can be a double debit amount on insurance. So you correct it by putting it on the credit side. But if we have been credited, we have been given money that does not belong to us, we correct it by debiting that particular amount. That has to do with correction of errors. You have to know how to correct errors before you go and sit for tomorrow's paper. Okay, so in conclusion, this is what we end up with. All right, and then you have your totals here, which you see here. This is your CRJ total, and this is your CPJ total over there. And that was your opening balance, which you see, which is your unfavorable balance. And then you end up there with your 18,425. Okay, and then as you close your PRS, remember you have this one and we have those two amounts over there, and then we now have this balance here, which we then bring here, and we have that. Then we say which side is the highest amount. It's your debit side, so you add those three amounts, and then you have 34,465. 34,465 here. Then you say 34,465 minus 17.9 to end up with 16,565. That is how you end up with the balance as per bank statement there. Okay, so as I said earlier on, I will not be able to do the internal controls on cash. You have to be able to go and prepare on the internal controls of cash. How do we manage our cash? All right, don't just say division of duties. You have to show two separate people performing two separate duties. Very key that money can go missing. What do we do in that case? You have to know all your other terms that pertain to the cash transactions so that you can be able to answer questions if they are posed. So I will not be doing another PRS. I'm going to quickly jump on to our CRS because of time constraints. But I want to encourage you to do that very same PRS that you find in your worksheet. Please complete it, and then you will see how some of these transactions can be done. Okay, let's go on. So in the creditors reconciliation, we are told here the following information relates to cap traders. So with this one, I'm going to do two different ones. There's one which has the creditors ledger against the statement. So remember, what are creditors? Creditors are people or businesses whom we owe. Creditors, people or businesses whom we owe. So we'll prepare a ledger that is done by us. At the end of the month, they prepare books on their side. And then at the end of the month, they send us a statement. And this comes from them. So as we're reading, we have to know the following information relates to cap traders. This is us. And the balance of Deutsche Trade, that name is them. All right. Okay. And then in the creditors ledger does not match the closing balance. So that is why we're going to reconcile, because there are amounts that do not match. And then we are told to show the correction or the errors and omissions, and we must show a figure with a plus or a minus or no entry. Especially when they say no entry, it is very key, because I've seen instances where you leave it blank, you lose a mark. You are supposed to write no entry so that you can be awarded a mark. So do not leave any space blank, but rather record either a plus, a minus, or no entry. Okay, so let's come here and then we're going to see. Here we go. So in this case, we are supposed to put the amounts. So we know this is the amount from the ledger, and in the ledger is 25,670 credit. Credit, it simply means we owe them. So we come in here and we're going to come here and then we're going to say 25,670 over there like that. And the monthly statement received from them, debit 28,155, 28,155, 28,155. Here they say debit. It simply means the same again. Because remember, when they see us, they see a debtor. So in their books that side, they prepare a debtor's ledger because they see us as their debtor. Still with me? Okay, let's simplify it. In the creditors ledger, which is done by us, on the credit side, it's going to be a plus. This is where we record our invoices when we buy from them. And then on the debit side, it's going to be a minus. This is where we record the EFTs. And this is where we record our debit notes when we return. And then according to them on the statement, on the debit side, this is where they have a plus. This is where they record the invoices. So if we owe them, that balance is going to be on the debit side here, 28,155. It simply means we owe them. The same as that balance of 25,670 means we owe them. So don't let the debit confuse you, because remember, it works more like you understand. And then we come here and then we say on the credit side, it's a minus there. And then we come and then we have it like that. So your EFTs are going to be there as well as your debit notes, which they may indicate as credit notes. Okay, so let's see how we can do this. But I wanted you to understand that this 28,155 is simply the same. It means we owe them. Okay, let's go on now. Number one. So in this topic, you need to know source documents and their signs. Source documents and their signs. You need to know source documents and their signs. Okay. Once I see the name invoice, in my mind, it must register that an invoice is a plus. Okay, an invoice is a plus. So I have an invoice for 8820 that was correctly entered in the ledger. The ledger is done by us. So an invoice was correctly entered by us, but the statement of account, remember statement is them, recorded it as 9,300. So in the statement, it was recorded as 9,300. The clerk, our clerk, contacted them, and they confirmed that they would correct the error. So they are wrong. So they recorded the 9.3, which is wrong. We recorded the 8820, which is right. So now let's see if we can fix this. So we recorded the 8820. They recorded the 9.3. They overstated an invoice. With how much? The difference here is 480. So once an amount is overstated, remember what I did in the BRS. If an amount is overstated in the CPJ, you record it in the CRJ. Opposite. So here we are now working with signs. If you overstated a plus amount, you correct it by getting the difference and you record it with the opposite sign. You're following me? If you overstate an amount, you get the difference and then you record that difference with the opposite sign, knowing that an invoice is a plus. So I'm going to come here and I'm going to say, who made the error? Here you have to know the ledger is us, the statement is them. So where do we come? We come, okay, remember we got the balances, by the way. So we're going to come and we're going to say 480. I'm going to come and say minus 480. We still okay? Okay, let's go on to B. B then says, EFT 3092. EFT. What sign is an EFT? Is it a plus or a minus? An EFT decreases. Okay, EFT, remember what we did earlier on? EFT, what sign is an EFT? An EFT is a minus. So we come here, we say an amount with a minus for 9.5, which we issued to them, was incorrectly recorded in the CPJ as 5.9 and posted as such. So the correct amount is 9.5. All right. And what happened is we recorded an incorrect amount, which is 5.9. All right. And then the difference between these two, by the way, I lost my calculator, and then the difference becomes 3.6 here. The difference becomes 3.6. So if I have my 3.6 here, the question then is, if an amount is understated, here you can see we recorded under. Okay, we recorded under. If I record under, I have to see what sign it was. It was a minus. Once an amount is understated or undercast, you record the difference with the same sign. You following me? Okay, so if it's under, you keep the same sign. Okay, so you're coming here. The sign for the EFT is a minus, and the difference that we got is 3.6, and that 3.6 we must still say minus. So I'm going to come to B, and I'm going to say minus 3.6, like that. Same sign. Let me go on to the next one. Traders incorrectly credited a debit note. Ooh, that's an exciting one now. Let's see again. Traders. Who's Traders? Okay, you have to know who is Traders. Traders is us. We incorrectly credited a debit note. Okay, let's see. Where are debit notes supposed to go? Debit notes must go to the debit side. Debit notes must go to the debit side. Okay, what sign are they supposed to have? A minus. A minus. But what happened here? Let's see. We're told that the debit note, which is supposed to be minus, was posted incorrectly to the credit side. The credit side is a plus. Remember, it is invoices that go to the credit side. So we added an amount that we're supposed to subtract. We added an amount that we're supposed to subtract. All right, so what we do, we come here and we subtract it. So the first one, we're going to come and say minus 620 to cancel the error, minus 620 for the correct thing to do. So we record two 620s, minus 620, minus 620. Okay, are we good? Let's go on to the next one. Let's go. The next one is D. It reads, an EFT payment of 5.5. If it's an EFT payment, that's a minus. EFT payment, that's a minus. An EFT payment of 5.5 was recorded in the ledger, but did not appear on the statement of account. So that EFT payment did not appear on the statement of account. Upon investigation, it was found that this payment was actually made by us to Indwe. Indwe is not these guys here that we are dealing with. The guys with a very difficult name. So we actually made a payment to a different distributor. So what we had done is, once we made the payment, we recorded it in the ledger. That means we came to the ledger. Remember, in the creditors ledger, here's a plus, here's a minus. Once we made an EFT, we came to their ledger and we said minus 5.5. That is what we did. But upon investigation, then we realized, no man, we recorded this amount in the wrong ledger because we actually paid Indwe, not the guys with the difficult name. So what we then do, we need to come and cancel that amount. So you're going to bring it to the plus. You're going to say plus 5.5 so that we can cancel that error. So we're going to come to information D, then we're going to say plus 5,500 over there like that. Let's go to E. The bookkeeper failed to record, invoice 958 of 6,870, which was received from them. An invoice is a minus. The bookkeeper forgot to record a minus amount. All right. The bookkeeper failed to record a minus. Is it correct that an invoice is a minus? Thank you. An invoice is indeed a plus. All right. So an invoice is a plus. Remember, our invoices are over here. So the bookkeeper failed to record an invoice received from them. So what do? We must come and we record it ourselves. So we come, then we say plus How much? 6870. And someone was saying, but Mr. Simbi, you are not showing us no entry. That means here it's going to be no entry here. Here it's what? No entry here. Thank you for reminding me that. Thank you so much. F. The statement of account received from them reflects interest of 255. Remember, interest increases what we owe them. Interest increases what we owe them. Charged on overdue balance. This interest must be recorded in the ledger. So I'm going to come and say plus 255. We must show that we owe them more because they've charged us interest of 255. Then G says transactions after statement. So these are transactions that are happening after the statement. Invoice is a plus. Okay, no entry. Okay, thank you for reminding me again. Invoice 1654 for goods purchased, that is 8,700. An invoice must be recorded, but these are transactions that are coming after the statement date. So the statement has already been sent to us, and then we realize that there are transactions that took place after that. So I come, then I say plus how much? 8.7. Goods returned, it's a minus. So we come in, then we say minus your 2,920. And then we take our calculators, we add everything. All right, so we add, remember to add your opening balances as well, so that we end up with that. Remember to add your all amounts so that we end up to that where it balances. So this was the first version of the creditors reconciliation, where we did the creditors ledger versus the statement. You will see that there are others that bring two tables, where they give you the creditors ledger as a table and they give you the creditors statement as a table. Please do practice with those again so that you can be able to familiarize yourself if such a thing is to appear. The next one that I'm going to go to is a different one, where we have the creditors control and the creditors ledger. So it says the information relates to FN Traders, which sells computers, and it says taking into account the errors and omissions, calculate the correct balance of the creditors control account and the creditors list. Now, very key to note that in the previous one we did the ledger, they did the statement, but in this version now we do the creditors ledger. The creditors ledger is done by us, where on the credit side it will increase, on the debit side it will decrease. Remember, we have a creditors ledger. This is per individual creditor, and then we have the creditors control account. Okay, this now becomes a summary, and the creditors control, we deal with totals, a summary, whereby again on the credit side it's a plus, on the debit side it is a minus. So this one is more of a reflection, because the control is a summary of the list of the ledger. So here we don't have the sign as we had in the previous one, but in here it's going to be a reflection, exactly the same thing. Okay, let's see now. Okay, so we are given the creditors control account balance, which is that one there, as you can see here, and we're given the creditors list that is from the ledger, and this is our ledger, our creditors list. So if you add these amounts, you will see that they give you 203,540, which is what we have there. That is how we have that particular amount. It is a total of all our list. So you see that at times the words may be used interchangeably: the creditors ledger, the creditors list. Let's go and see now. You will find that you're going to find much more of different words, as you see here, where they're going to be talking about totals. And here it says the total of the creditors allowance is journal. So we know that in the CHA, we record our debit notes in the CHA, and so that means the sign that we would characterize the CHA with is a minus. So the total of the CHA was overstated by 6.4. So if an amount has been subtracted too much, I don't know if that makes sense, we overstated a negative amount. Okay, and we overstated it by 6.4. And once I hear the word total, I know that in my creditors control, I deal with totals in my creditors control. But in my creditors list, I deal with individual accounts. So in my creditors control, we're dealing with the total of creditors, totals. So once you hear the word total, you must think creditors control. But if they bring in a name, they start talking about FF stores, HD suppliers, you know that it has to do with the list. So I have to come to the creditors list. So here the saying, again, the total. So it tells me creditors control. The total of the creditors allowances journal, which is a minus amount, was overstated. So we subtracted too much. So we're going to come here, then we're going to say plus 6.4. Over there like that. Let's go on to the next one. That's it. FN traders. Now you hear now, it has a name in it now. FN traders recorded a credit purchase, a credit purchase, a credit purchase. All right, that's a plus of 29,880. Okay, so you have to know who is FN traders. Are we together? So FN traders is us. So we recorded a credit purchase from HD suppliers in the creditors journal, which is very correct, after deducting a 10% trade discount. So we are then told they, our suppliers, then informed us that the trade discount agreed upon was 5%. So let's do this. It means this amount here is after. That means my 29,880 is after I have said 100%, which is the full amount, minus 10% trade discount. That means that is 90%. So this is equal to 90% over here. What then was the 100%? What then was the 100%? The initial amount. For me to get that, I would therefore come and say what I want is 100. What I have is 90 multiplied by 29,880. Okay, like I said earlier on, the calculator is gone, batteries flat. So what do we get here? We get 33,200. So it means before the trade discount was given, the goods were 33,200 before the trade discount was given. So now the trade discount was 10%. All right. The trade discount was 10%, and you could have gotten the difference here to get that trade discount. All right. And if you would want to make it faster now, you can quickly come and say the amount that we recorded was not correct. All right. But what we must now come and get is to now say that 33,200, which is the initial amount, let's now get 5% because the discount was supposed to be 5%. Then you get 5% of that, which gives you 1,666. You will find that if you had used 10%, that discount would have been double. I don't have my calculator, like I said. I would have shown you right on your screen if I had it here. So the problem that we have here is we have an error that was committed in the original entry. When we recorded this credit purchase, we already recorded it with a wrong amount. That means the amount that went into the journal, which we then posted to the control, had an error. And the error was we overstated a discount. We subtracted 1,666 too much. And to correct that, we come and we add it back, 1,666. And we don't correct it only in the control, because this was an error of original entry. Once you record from the document in error, it affects both the control and the list. So you have to come here and correct it again, plus 1,660. Is it 66 or 60? 1,660. There is no 6 here. 1,660. 1,660. My bad. You see, when my adding machine is not at play, things don't go my way. 1660. Please note it's not 66. Okay, so that is how we would then correct that error, 1660. Okay, let me go on to the next error. On the next errors, we have two more errors. Goods returned, we know that if goods are returned, that's a minus. Goods returned to PS retailers for 5.6 and recorded in the CAJ. These goods were recorded in the CAJ. Were posted to the account in the ledger as an invoice. So the error was in posting to their account. The account simply refers to the creditor's ledger. So we're talking the list. So when we went to the list, instead of subtracting, we went and we added it. So we are going to go and we're going to subtract minus 5.6 minus 5.6 there. The first one is to cancel the error, and the second one is to do the correct recording. An invoice, that's a plus, received from FF Stores 8550 and recorded correctly in the CJ. So they're telling us it was correct in the CJ. Once it's correct in the CJ, it's also correct in the control. Was posted in error to their personal account. Okay? Was posted in error to KS wholesalers. So you have to know, we bought the goods from FF Stores, but we went and we added them to KS wholesalers. So what it simply means is we know that KS is in here. KS is in here in the list, as well as FF is in here in the list. So we're going to go, because we received the invoice from FF, but we put it on KS. So we added it to KS. So let's go, we subtract it from KS minus 8550. Then let's go and add it to FF plus 8550 like that. And then eventually you get the total. You get the total. And if you add from the top, it must give you 194,000 from the top. 194,000 here. And here you also get 194,000 over there like that. Okay, I'll show you when we come here that it ends up with 194,000. Okay. It then says here, FN traders, we intend to settle the account of KS wholesalers. So KS wholesalers here, remember, we're owing them 54,950. All right. But remember, there was that transaction here, the very last one. All right. So we had made an error with KS. So with KS, what did we do? You remember what we did? We had added an amount to them in error. And so we went to KS and we subtracted how much? We subtracted that 8,550. 8,550. So the correct amount that we owe KS wholesalers is actually 46,400. And then we intend to settle this amount, and we qualify for a full settlement discount of 1856. And then now we want to calculate the percentage of discount that they would give us. So we say what we want is the 1856. This is equal to 100%. So we divide that by 46.4, and then we multiply by 100 over 1, and that will give you discount of 4%. So we would be given a discount of 4% if we take it this way. Are we together? So if an examiner is to test, they can test it in many different ways. You need to remember, so far in today's lesson, we've done the PRS and we've done the creditors recons. And in the creditors recons, we did two different ones. We did one with the statement and we did one with the control. I would encourage you, as you're starting, please go through your debtors control as well. That would be beneficial. Okay, let's come to cost accounting. Cost accounting. We're going to take a 2-minute break. I think all of you have seen that my voice is not so well. So we're going to take a 2-minute break. Let's make it 1 minute so then I can just drink a bit of water. Then we do cost accounting. So you see you in 1 minute. Let me just take a bit of water so that my throat can continue working. See you in a minute. Welcome back. I'm going to be doing cost accounting now. Uh, and yeah, here's an example of the production cost statement. Very key that you know your formats. Here's an example of the abridged statement of comprehensive income. Very key that you know the format as well. And I want to encourage you to be able to do several calculations, even calculations that pertain to break even. So our first calculation is to do with this business called stylish suits. And we're going to calculate our direct material cost, direct labor cost, factory overheads, and the abridged statement of comprehensive income. And we stand to get 11 marks. So in total here, we want to see if we can do the entire thing at the same time. Let's see if we can do that. So let's begin. Information A. So I'm going to try to read from A, B, C, and we keep going. And then we see if we can finish in time. Okay, we've already overstayed our time. We should have finished at exactly 4, but we have been allowed to continue a bit. So let's see if we can just push it a bit. And then in other places, I'm just going to be giving you figures because I am currently behind time. Information A then reads, during the financial year, the business produced 12,250 meters of fabric for the manufacture of suits. That is this number of suits. This was secured in the storeroom. And then they say fabric was issued to the factory to meet the production target of 3,000 suits as follows: 3.2 meters of fabric and an allowance of 5 meters or 5% thereof for wastage required to manufacture one suit. All right, so here we're calculating direct material cost. So there are several ways in which one would have done this, but let's see if we can do it a bit quicker. So if we say that we intend to meet a production target of 3,000, so I'm going to come here, I'm going to say my 3,000 over there, and we know that each suit is going to take 3.2 meters. So each suit is going to take 3.2 meters of fabric. But however, we are giving an allowance of 5% for wastage. That means I'm going to need to say 3.2 meters multiplied by 105 over 100 to give me the actual meters of fabric that we're intending per dress, taking into consideration the wastage. That's going to give me now 3.36. And then we now say this times the 3.36, that should give you your 10,080. All right. So, and then we now say that 10,080, then now we need to multiply. We are going to multiply now by the cost per meter of fabric. But we are not given the cost per meter of fabric. We are told we during the financial year, we purchased 12,250 meters of fabric, and we paid 5,512,500. So that means if I am to get now my cost per meter, I need to do some calculations. I am now going to say my 5,512,500, and I divide that by the meters of fabric that I bought, which is 12,250, and that's gonna give me 450 rands per meter. So I come here, I multiply this by 450, and then that will give me my direct material cost, which is going to be 4,536,000. That becomes my direct material cost. Okay, if an examiner might test, calculate the wastage here in rands, calculate the wastage in rands, you must be able to calculate the wastage in rands. Remember, you were given 5% as wastage, so you must be able to do the reverse calculation to get the wastage. An examiner can test on the wastage in a reverse calculation as well. Let's come to the direct labor cost. How do we calculate direct labor cost? We're told that we have 40 machinists. These are the guys that operate the machine. We call them machinists. So we're going to take our 40 guys that operate the machine. We're going to say 40 guys that operate the machine. Then we multiply with the basic salary per month, which is your 9,800. And here is where most of you forget that you need, here we are told this is monthly. And when we are doing a production cost statement, it is for 12 months, a brief statement for 12 months. So you have to come and multiply by 12. Don't forget that key aspect. And that is going to give you 4,704,000. So I get 4,704,000 here. And then I come in and I'll say, here there's a bonus that is going to be given. All right, there's a bonus that is going to be given. And it traces the factory machinists are involved in the production of suits. The earnings of the supervisor have been recorded as factory overheads. Annual bonuses were paid to employees. The bonus budget is distributed between the machinists and the supervisors in the ratio 5:2. So it means when we see the bonus of the supervisors can also tell us about this question mark here, the bonus of the machinists. And we know that the bonus of the machinists, so we're coming here to get the bonus of the machinist, which is the 5. And what we're given is the bonus of the supervisors, which is 2. So it's 5/2. And then we multiply that by our 84,000. And that will give me 210,000. So I'm coming to say the 4,704 plus 210,000, which is the bonus now. This is the bonus. And the next one that you have to keep in mind is your employer's contribution. And here we're told the employer contributes 1% of the gross earnings. So the gross earnings is 4,704,000, and we're going to get 1% of that, and that's going to give us 40 of the gross earnings how much it we got as our gross earnings. It was 4,900,000, or I had not added these ones. to get 4,900,000, and because we have to get our 1%, 4,910,000, 4,914,000, because we have to say 4,914,000 times our 1%. I don't have my calculator here, but your UIF contribution is to be your 49,140, and then we add everything to get our final amount, okay, which would need a calculator also, and my calculator is now down. Okay, we have to wrap up, but before I wrap up, I want to encourage you in your spare time, please go through your abridged statement of comprehensive income, and also go through your break-even calculation and commenting. I want to encourage you, please do go through your break-even calculation and as well as commenting. I have another one again here that I want you to look at, especially questions where they have to increase profits by. So please look into those questions and do the calculations that are necessary. Here is also questions that I need you to look at. This has to do with problem solving and control. On budgeting, I intended to do the creditors payment schedule, but as I've indicated due to time, I'm not able to do that. Please do your budgeting and also do calculations that pertain to the collection of debtors. So you must do your creditors payment schedule as well as the debtors collection period, debtors collection schedule, debtors collection schedule. Please do the debtors collection schedule as well, and then do calculations also that pertains to adjustments such as your rent income. All right, and then do other calculations as well that pertains to salaries. I'm just gonna move as I am now towards the end of my lesson. Please do expose yourself to such adjustments as well, and we have to call it a day now. We've come to the very last class for the year 2025. It has been a long run, a long journey. Most of the activities that I am passing through here, if you go to the previous lessons, you'll find that I have done them in this very same lesson. They are on record. So if you need some of these calculations, please do revisit the previous lessons and you will be able to get assistance. We have to call it a day as we have come to the end of our lesson. I want to wish you well for tomorrow. I wish you the very best. Make sure you arrive on time. You arrive with your calculators and everything that you need for tomorrow's exam. I have no doubt that you're going to be achieving the best results that you deserve for yourself in the year 2025. Come January 2026, we'll be celebrating. I wish you all the best for tomorrow's exam. And until next time, if ever we do meet, please do take care. I really did enjoy having you in my class this year. This is my final goodbye and take care.